You deposit money in your bank account. You feel responsible, adult, financially stable. Meanwhile, the bank is quietly using your money to make more money. Not a little, a lot. And the weird part, they are not doing anything illegal or shady. This is literally the system. Banks aren't just safe places to store cash. They are businesses, highly optimized money machines. The core idea is simple. They take your money, move it around, and get paid in process. Today, we're breaking down exactly how that works. No jargon, no finance degree required. We'll use one running example the whole time, your monthly food delivery habit. Because yes, even your late-night burgers are part of this system. My name is Wojak, and I spend way too much time figuring out how money actually moves behind the scenes. Most people never really see this part, and it's usually why making more money feels harder than it should. Let's get into it. The basic deal. You give the bank money. They give you a number on a screen. That's it. Your balance is just a record that says, the bank owes you this amount. Important detail. Your money is not sitting in a vault with your name on it. In many cases, it gets used. So what's the deal? You get convenience, safety, and access. They get to use your money to make more money. Fair trade. But now let's see how they actually profit. Your money moves. When you deposit money, the bank doesn't just leave it there. They lend a big portion of it out to other people. This is called fractional reserve banking. Simple version. Banks keep a portion and lend the rest. So your untouched money is quietly funding someone else's car loan, business loan, or mortgage. Meanwhile, you're just checking your balance and ordering food again. Same money, 2 jobs. That's where things start getting interesting. Interest spread. This is the main way banks make money. They pay you a small amount of interest to keep your money. Then they charge borrowers a higher interest rate to use that money. The difference is called the spread. Example. You keep money in your account and earn almost nothing. Someone else borrows that money and pays significantly more in interest. That gap, that's profit. So while you're paying for your weekly food delivery, someone else is paying interest, using money that partly came from you. Banks sit in the middle and collect the difference. Clean, simple, scalable. Why your interest is so low. Ever notice your savings account barely grows? Yeah, that's intentional. Banks don't need to pay you much because your money is already very useful to them. Plus, convenience keeps you there. Think about it. You're not choosing a bank based on interest rates. You're choosing it because the app works and your card doesn't decline. Meanwhile, they are lending that same money at much higher rates. So the system is, you get ease, they get margin, and most people are fine with that trade. Loans equals big money. Loans are where banks really make their money. Mortgages, car loans, personal loans, credit cards. All of these involve interest payments over time. And here's the key. Interest turns time into profit. The longer someone is paying, the more the bank earns. So when someone finances a car or carries a credit card balance, they are paying for the convenience of borrowing money now. Meanwhile, the bank gets a steady stream of income. It's not flashy. It's just consistent. Credit cards. This one hits close to home. You order food delivery. You tap your card. Done. Feels free in the moment. But if you don't pay the full balance, interest kicks in. And credit card interest rates are usually high compared to other loans. That's where banks make serious money. Even if you do pay on time, there's still profit. Because every time you use your card, the bank may earn a small fee from the transaction. So your late-night burger isn't just feeding you. It's feeding the system too. Fees everywhere. Banks don't rely only on interest. They also charge fees. Some are obvious. Monthly account fees, ATM withdrawal fees, overdraft fees. Others are more subtle, like when your payment bounces and you get charged for it, or when you go slightly negative and get hit with a penalty. Each fee might seem small, but across millions of users, that's serious revenue. It's like charging a tiny toll every time someone messes up. And humans mess up a lot. Overdraft trap. This one catches people off guard. You spend more than you have. The bank still lets a payment go through. Sounds helpful, right? But then comes a fee. Sometimes it's a fixed charge. Sometimes it stacks if it happens multiple times. So that one extra food delivery when you were low on cash, now it costs more than the meal itself. Banks frame it as a service. And technically, it is, but it's also a profit center. Investments. Banks don't just lend money. They also invest. They might buy government bonds, corporate debt, or other financial assets. These generate returns over time. It's basically another way of putting money to work. Again, using funds that largely come from deposits. So your idle money is being used in multiple ways at once. Loans, investments, transactions, all generating small streams of income that add up. Transaction fees. Every time money moves, someone might be paying a fee. When you swipe your card at a restaurant, the business often pays a small percentage to process that payment. Part of that can go to the bank. So your food delivery order, the restaurant pays a fee. The payment processor takes a cut. The bank may get a slice too. One transaction, multiple parties getting paid. You don't see it, but it's happening. Risk management. Now, here's the part that makes everything work. Not everyone pays back loans. Some people default. So how do banks survive that? They manage risk. They check credit scores. They adjust interest rates. They diversify across many borrowers. So even if some people don't pay, the overall system still makes money. It's like running a business where some customers don't pay, but enough do, with interest. Why banks feel safe? Despite all this movement, banks feel stable. That's because they are heavily regulated in most countries. There are rules about how much they can lend, how much they must keep, and how they manage risk. In many places, deposits are also insured up to a certain amount. So even if something goes wrong, you're usually protected within limits. This trust is what keeps the whole system running. If people didn't trust banks, they wouldn't deposit money, and then the system breaks. The real business model. Let's simplify everything. Banks collect deposits, lend money at higher rates, charge fees, invest funds, take a cut from transactions. All of this adds up to one thing. They make money by moving money, not by storing it. Movement equals profit. The more money flows through them, the more opportunities they have to earn. Your role. You're not just a customer. You're part of the system. Your deposits help fund loans. Your spending generates fees. Your borrowing creates interest payments. Even your food delivery habit plays a role. You store money, spend money, maybe borrow money. At each step, the bank is a way to earn. Not always from you directly, but somewhere in that chain. Rapid recap. Banks are businesses, not storage units. Your balance is a liability for them. They lend your money to others. They earn from the interest difference. Loans generate long-term income. Credit card can be very profitable. Fees add up across millions of users. Overdrafts are costly. Banks also invest your money. Transactions create hidden fees. Risk is managed, not avoided. Trust keeps the system alive. Money movement is a core model. Final takeaway. Banks aren't evil, but they are optimized. Once you understand how they make money, you stop being surprised by fees, interest, or low returns. And you start making smarter decisions. Like maybe thinking twice before financing something. Or ordering that fourth food delivery this week on a credit card. If this made you look at your bank account a little differently, hit like, subscribe, and maybe check your last 10 transactions. You might learn something interesting.